Let's be honest, you can do better than the VOO and the S&P 500, and that's exactly what we're going to be looking at in this video today. So when we think of the S&P 500, it is the entire market. It is really a measure of the overall health of the stock market, and of course, you have an instant diversification because you're in every sector of the stock market with that S&P 500 fund. If you invested $1,000 into the VOO 10 years ago, reinvesting all of your dividends, you would have about $3,500 today. So pretty good return with an average return of about 13.2% over the last 10 years. We know when you start extending that a little bit further, the S&P 500 yields about a 10 to 11%. Now, of course, this is not adjusted for inflation, but what if you could do even better when we think of that same 10-year return? And in today's video, we're going to be looking at the Vanguard Information Technology ETF, or the VGT. Now, when it comes to the VGT, or this technology ETF, I am personally invested in it. Same with the VOO with the S&P 500. I do invest in both of them because that gives me a little bit more diversification while having a strong focus within that technology. So when you think of this, and honestly, the last 10 years, it has been crushing the VOO or the S&P 500. When you think of the return on this one, you're talking a total return of around 21%. So even again, thinking in relationship to the S&P 500. So if you put $1,000 into this one, you would be yielding about $6,600 versus the 3,500. So almost doubling up your money, which is a big ETF for long-term growth. Also, another reason why I do love the VGT is when you start breaking it down and thinking of what is coming in the future. Now, I know looking at past performance, not always indicative to how an ETF is going to go ahead and perform in the future. But when you think of, and again, these are questions to really ask yourself when you're doing research. Artificial intelligence, do you think it's going to be bigger in the future, more utilized in the future than we are seeing right now? My thought about that, absolutely. Do we think all of these large tech companies are going to continue with a huge expenditure and a huge investment into artificial technology, as well as computers, supercomputers, quantum computing? My thought about that, absolutely. You're going to see a lot more growth in the technology section that you could see in a bunch of these. Now, of course, for me personally, looking at both of these ETFs, I do dollar cost averaging. So what dollar cost averaging is every 2 weeks, I put a set amount into these ETFs. With that being said, it might be $100, let's say, every 2 weeks. If the market's up, great. If the market is down, I am buying it both ways. When the market is up, I buy a little bit less. When the market goes down, I do buy a little bit more, and I do this automatically. That is the way to do it. So when you think of those same 10 years, if you added another $10,000 into the market, which really isn't a lot, when you think $100 a month over that 10-year period, you're looking at $12,000. So the return would be roughly $41,000. So over a 10-year period, you could get about $41,000 into the VG just because of the growth factor. And again, thinking of relationship to that in the S&P 500, if you invested that same $12,000, you'd be at about 25K. So the difference right there, you're talking, making $25,000 in the S&P 500, making 41 in the VGT because of the growth of technology over the last 10 years. Now, one thing to note with the VGT is it does come with additional risk. When it comes to IT and when it comes to the focus in here, a majority of the focus falls into Apple, Microsoft, and NVIDIA are the three largest holdings of the, because it is not weighted, it is really by market cap. And looking at what they're doing in here, it is 48% of this. So if we have issues with Apple, Microsoft, or NVIDIA, this one could make and really have a very big downside, which of course the upside comes with some additional risk, but the downside could be the exact same. That is why when it comes to these technology ETFs, and again, me personally, I only invest in ETFs, and that is all that I will invest in. I don't buy individual stocks, but looking at these is having kind of a very decent risk appetite. So looking at something like the VG, this is a point where I'd probably put 40% of a portfolio if you're on the younger side, 20 to 40 years of age, 40% into the VGT, into the QQQM could be really good, knowing that you have a very long runway until you get ready for retirement. And of course, carrying the S&P 500. Me personally, 25% of my portfolio is in the S&P 500. 40% is into the VG, into a high growth technology fund, because I still have 20 years to retirement. Looking at what this has done the last 10 years, what I anticipate it to do for the next 10 to 20 years, it is going to have some very, very strong growth potential. Now, of course, like I said, with that S&P 500 fund, you are investing in the 500 largest companies in the United States, which does make a big difference. So let's hop over. I want to check out the VGT, break it down a little bit more for you guys. So let's go ahead and take a look. All right, so right here we have the VGT, the Vanguard Information Technology. Now you'll notice right off the bat, the expense ratio is a little bit higher. It's about 3x higher, but still a 0.1 is very, very cheap. And when you think of investing into funds, into ETFs, when you think of the expense ratios of a financial advisor, they run around 1%. So you're paying essentially 1/10 to own something of this nature, and it's even cheaper to own the S&P 500. So the overview in this, and this is where I want to show you guys kind of what's going on. So the performance in here year to date, 21.43. We're 21.5%, which is crazy. I know the VGT is doing incredibly well. Even the VOO, the S&P 500 itself, is doing incredibly well. And we're going to continue to see that performance the rest of the year. And of course, next year, if the Fed continues to lower interest rates, we are going to see more of an investment on the technology side, because with making money cheaper, there's going to be more borrowing power. Now, you'll notice also that this goes back 20 years. We were just talking about the last 10 years, but I do want to break it down with the last 20 years. Now, of course, risk reward scale 5. This is kind of maxed out, which a lot of these funds are when you start looking at a very strong focus into IT, into information technology. There is a lot that can go down and up with these. Now, performance and fees, this is again where I want to kind of break it down. So you notice the 1 year, we're almost at 30% over the past 1 year. Kind of incredible. But when we start looking at, and honestly, when it comes to investing, when it comes to ETFs, you're looking at the 5-year plus time frame. I don't really pay much attention to the month, the 3-month, the year to date, whatever. Those numbers are really just kind of lost on me, because of course, 1 year looking at 2022 did incredibly poor. We actually seen about a negative 20 to 25%. But then when you look at 2023 and 24, we had a really strong growth, and we are seeing it this year, which again is the reason why I don't really focus on the 1 year. I am more concerned with what the 5 year is doing, the 10 year, and the longevity. So over the last 5 years, you can see 22.94%. So a pretty good yield. 10 year, we're looking at 20.25. So even over the last decade, we are over 20% for the growth in year. And then since inception, so in the last 20 years, it is still at 13%. So it is just hedging out the VOO, that Vanguard S&P 500, by a little bit, which I believe since inception, depending, I think one is a little bit older, but overall performing incredibly well. Now, when we start again looking at the expense ratio, 0.1, so pretty good still with the expense ratio, but I want to show you exactly what we're holding, and this is kind of the difference. So looking here, we have the VGT at 317 stocks. So they are pretty well diversified, even though you're investing into one sector, into that information technology sector. When you think of the VOO, you are in 500 of the largest stocks within the United States. So it does have a lot more diversification, and of course, a bunch of different sectors within there. Now, risk associated with the aggressive fund, but this is what I wanted to show you guys. So when you start looking at this and you break down really what it is, you can see application software, 14%. But look, when it comes to semiconductors, 28, almost 29%. System software, another 20. And of course, technology and hardware, another 18%. 14% application. So you can see this is ultra focused into that information technology, and not just really the AI, but everything that encompasses IT, which again, when you think of diversification, you might not be over all of the sectors, but you are over all of the different parts when it comes to IT. And then when you start looking at companies, this again is something really big to note. When you look at Apple, 16% of the fund, NVIDIA, 14%, Microsoft, 13%. So right there, I mean, we have 10, 20, 30, 40. This makes up about the 45 to 48% that we have within this company. But even when you start looking at the ones that are outside of kind of the very core IT AI realm, we have Broadcom, Adobe, Salesforce, AMD is in there, Oracle, Cisco. So again, having exposure to something of this nature will make a big difference, especially being on the younger age, because you have the time for growth. When we think of the next 10, 20, 30 years with something like this ETF, This is where I am changing. And personally, at age 45, I have again 40% into the VGT. We break it up into the SCHD and also the VOO with the rest of them. And about every 5 years, I adjust some of those percentages to where we're dollar cost averaging into a bunch of different ones, into the 3 ETF portfolio that I use. And that is all that I invest in. So in the past 3 years, with the portfolio that I built, and you can check out the video, it's down below. But looking at the contributions that we made and also the growth factor, we're up about 81% over the last 3 years because, of course, 2022, a really big down year. We dollar cost average into it every single 2 weeks. We were putting money in there. And then when it rebounded in 23 and 24, we seen a tremendous amount of growth in there. All right, guys, so that is going to do it for today's video. Let me know if you're invested in the VGT or the VOO or other ETFs that I missed. Now, I did compare kind of the VGT to the QQQM, and it seems like the last 10 years, the VGT does edge it out a little bit, even though it is a lot more focused on the IT, and I feel like that is going to continue in the future. So again, guys, that's going to do it for today's video, and I'll catch you in the next one.